Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm gonna show you something that we scientifically and metaphysically change the way you approach market and to actually optimize you to take the most sniper signals. Okay, if this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and refer these channels to your network so that YouTube pushes to a higher level of audience. In today's topic, we shall discuss Lagrangians and principle of least actions apply to Forex synthetic market. Lagrangians and principle of least action apply to Forex synthetic market. I will start with reading the document and then we'll go ahead to read the chart and deploy this in real life application. The principle of this option states that from all possible paths, a system could take between 2 points. The actual path it follows is the one that minimizes a quantity called action. Essentially, meaning nature chooses the most efficient path, like a system trying to use the least amount of effort or energy to move between states. Okay, so the Lagrangian L is equals to T minus V, where T is kinetic energy and V is potential energy. S is integral of Lagrangian over time, okay, where L is Lagrangian, T is kinetic energy, V is potential energy, S is action, dt is infinitesimal. Okay, so remember the topic, we are talking about principle of least action. Okay, the market will always follow the path where it will consume the least amount of energy, where it will consume the least amount of stress, where it will require the least amount of effort. Okay, so this is Lagrangian mechanics and we are deploying it in the Forex market because the price movement is actually a mechanical system. Because what is a mechanical system? Something that is under the influence of internal and external forces, okay, and something that changes state because of those internal and external forces. So the market is influenced, or the market is driven by both internal and external forces. These are forces of demand and supply. The market will always take the path where it requires the minimum amount of energy. That means the action, which is the differential of kinetic energy with respect to potential energy, is going to be like the integral of this action is going to be equal to 0. So you are looking for that part, you want to produce that part, you want to synthesize that part, you want to formulate a part, you want to mathematically and metaphysically construct, determine a part in which the integral of the Lagrangian over time is equal to 0. Physically it's very, very impossible, but mathematically it is possible. Okay, but with experience and careful day-to-day analysis on the chart, you will actually be able to know how to predict the path of least action. Okay, and when you know how to predict the path of least action, immediately you place that trade, the market is going to take that path. Like, it's not going to range, it's not going to fluctuate, it's going straight to profit, it's going to hit your take profit. Like, it will take the minimum amount of time to actually hit your take profit. Okay, so because of such belief and such idea, you really want to place your take profit where the market will take minimum energy and least amount of time to actually hit that take profit, and you want to place your stop loss where the market we find it difficult, like where the market will actually have zero drawdown. In other words, your stop loss does not exist, because immediately you place that trade, is going to follow the path of this action, meaning that if this path has the least action, it means that the force along that path is maximum. You're actually maximizing the forces that make the price to move, while reducing the action to be taken in order to move along the path. Okay, so the force allow the market, being accompanied by forces of supply and demand, actually want to take a path where there will be minimum waste of time and minimum waste of energy. Okay, that's what this principle is talking about. So if you look at this diagram, there are two diagrams here. You notice that we have point 1 and point 2. Here is position T, is time. So for price to move from this point to this point, remember price actually move both vertically and horizontally in time from left to right, based on left-right rule, of which I'm going to drop the link to the left-right rule in the description of this video. So price can move like this, not necessarily going to, price doesn't move back to left, but for financial purposes, it has to move like this and then come to this point, okay, in future. But it cannot move backward, but it will always go from left to right. So the path that minimizes the forces, that minimizes the energy, that minimizes the Lagrangian, which is the integral of differential of kinetic and potential energy, that action that make this integral to be zero is the path that has that action is what we want to get. So the market can decide to follow this path to reach this point, but it's going to spend a lot of time doing that. And because time and energy goes together, if you spend time doing something, it means you are actually wasting a lot of energy on that thing. Take for instance, you started trading at the age of 15, then at the age of 20 you are still losing money, like you are not successful, you have not achieved anything after 5 years of trading. And another person started at the age of 15 and become massively and wealthy, like become successful, like the person becomes so much successful that he can be able to establish many businesses and achieve a lot of things, build mansions, get cars, and build companies as well. And then he did all these things within a space of 2 years. You can see that the person followed a path that minimizes the action, because that's why he's able to do it in a very small amount of time, and he was able to achieve big things. In other words, he spent the least amount of energy because he was able to reach his goal. He was able to be successful within a small period of time. Okay, so you can see there are a lot of paths to follow to reach a point from another point, but to get that path that minimizes the action, that set the Lagrangian back to zero, is the hardest stuff, and this is what I'm going to teach in this video. You can see you can move from point A to B, you can follow all sorts of paths, you can even follow a very big circle of large radius, yet there is this path in which you spend the less amount of time and the energy to reach to this point. Okay, so this is what you are going to be learning in this video, how to get that path, because this is just a mathematical principle. I'm going to show you practically how this part can be realized. Okay, because in most cases, when you place trade, it either go negative or go profit or fluctuate. So when it's going negative or fluctuating, you are following the path that does not support the least principle. You are not following the path of least principle. You are following a path where you are going to waste a lot of energy. But when you place trade and it exactly goes in profit, just like when there is news, the news actually go in your direction without spiking against you, that is part of this action, right? So I'm going to open the chart so that we go practical on this. There's nothing like solving mathematical problem here, but why I bring mathematical idea is to make you to be more focused on this, like to appreciate that this is possible, right? So right now we are going to actually define Lagrangian mechanics and principle of least action in the financial scenario. We're going to define it in financial environment because there will be a kind of change of terms, because you cannot basically say that mechanical system is exactly equal to financial system. There will be a kind of change of terms here. Okay, so I'm going to start by illustrating something. Okay, now this is a point A in the past. Like, as an observer, this is point you're observing, A. Okay, this is point A, and then if price follow this trajectory and get to point B, okay, it is assumed that this trajectory does not exist, because you have to solve the Lagrangian equation and principle of this action for you to predict this path. Okay, because the action which I have explained in the document is a function of the Lagrangian. So the action received the Lagrangian as an input to produce various real numbers. But when this real number is 0, we now say that we have a stationary action, and the path that leads to that stationary action is called the path of least action, or the path that has obeyed the principle of least action. Okay, so this path is arbitrary. I just force it out right here. Not that I can predict this, not that this path has been predicted, but this is an arbitrary, this is an assumption, because I didn't solve any mathematics. This is for explanatory purpose. Okay, so it is idealistic path right now. Okay, so the market actually follow this idealistic path from point A to point B. Now, in financial environments, the Lagrangians and principle of this action follows these ideas. Okay, immediately you place that trade, because this is uptrend market, right? So you buy. Immediately you place the buy, the drawdown D as a function of price and time is going to be 0. The drawdown is basically going to be 0. Okay, the open position, the trade is going to hit your TP in least amount of time, in least amount of time T. Okay, time T. Okay, in least amount of time. Okay, then another one, the energy spent is going to be minimum. It's going to use the least amount of energy. The energy spent, the action, which is the energy spent, because that action is energy differential, though it is integrated over time. Okay, so it's measured in a kind of joule seconds. Okay, so it's more of energy. So we can assume that the time maybe is a unit time. We allow those actions to happen within a unit time. So to avoid complication, okay, so it's more of energy. So the energy is what? The energy is what? Minimum. Okay, the energy spent is minimum, M. Okay, let's see this is mean, that is minimum. Okay, I'm just illustrating this. Okay, for energy to be minimum, what does it mean? It will be as if there is news in, during fundamentals in forex market. It will be like there is news, and that news has zero drawdown. That means the news follow one direction. It's not like news that will spike up and spike down. It just follow one direction. So when news action happen, if you shake the candlestick at any time frame, it is just a big bodied candle with no wick. So it is a momentum driven candle. In other words, it says the price movement went through a straight line. Normally price does not move in a straight line, so it's like the price movement go through a sharp straight line. Okay, if you go to much lower time frame, it's like the price movement just passed through a straight line, a perfect vertical straight line. An example is this, though in reality it may not be perfectly vertical, but we can take it to be vertical. So in this 1 minute time frame, we can say that this part is a Lagrangian part and is a part of least action, because the market does not even have time to create loops or retracement. It just went straight to the point. Okay, for you to determine this part mathematically, you need to solve some set of equations, and you have to be predicting the future, right? But you have to learn how to do this thing by practical means than mathematical means, than theoretical means. Okay, the idea of mathematical ideas, the explanation is to build your confidence that these things are possible. Okay, so that's cool. I will be going to higher time frame, and then we'll be actually considering the part of this action. Now, the part of this action is what you want for you to make profit, right? So in how many ways can we approximately, because you may not exactly know this part, but in how many ways can we use practical means or like intuitive means, like a kind of inductive method? Okay, from philosophical point of view, how can we be able to know this part without solving any mathematical formula, without solving the Lagrangian equations and principle of the action equations? Okay, now when market is moving, it will move in such a way that it will reach a supply, like it move in such a way that it will trade between supplies and demand. Okay, it will be moving from one supply to one demand, from one demand to one supply. Okay, because not only one force control market, two forces, people are buying, people are selling. Okay, this is one idea you have to know if you are deploying this Lagrangian principle. Okay, another idea is when market move, they try to create a potential level where price will always come to this level to pick orders before they will flow to another level, because there is this separation of levels. So price jump from one energy level to another energy level. Okay, the problem now is, can you be able to localize this energy level? If so, if you can localize, they can be in form of demand and supply or resistance and support. If you can be able to localize this energy level, where price will go and automatically reverse, we are close to deploying Lagrangian principle. In other words, when you deploy a calculus-based analysis, we are looking for levels where the rate of change of price is zero. That means we are looking for level where the time derivative of price, is zero at those levels. An examples of those levels, the example is this resistance. This is a resistance. Okay. Another example is support. Okay. Now you are looking for non-inflationary levels. That's a level that can never be broken. Okay. So in other words, it will make you, as a Lagrangian trader, it will make you to follow the trend. Okay. So you don't want to be considering support in a downtrend market. You will consider only resistance, and they don't want to be considering resistances in upward market. I'm going to show you an example. Okay, this one is upward. You don't want to consider resistances. You don't want to consider resistances in upward market, but you want to consider support in upward market, because you want to consider non-inflationary levels, levels that can never be broken. Okay, so that's good. But even if it does break, even if price break this level, it will be a fake out or fake breakout, right? So that's good. Now, if you want to get Lagrangian idea, if you want to get part of this action, you want to be at higher time frame, you want to measure the trend of the market, and then you want to know where market will come and pick orders, maybe using the order blocks idea, using demand and supply, using resistance and support, using liquidity sweep and other smart money concepts. Okay, now what this means is, you see what happened here. Okay, there are about 3 parts here. Yes, definitely we know that market actually reach, like market cannot break this level. Okay, yes, so the rate of change of price within this zone is approximately zero, right? But for we to get Lagrangian parts of this action, it's not just easy like that, because there is this one left. You see, it went up, and because we have our target is that this market will break our target is that this market will break this high here. Okay, so it went up and then suddenly changed direction. No, based on Lagrangian and this action, principle of this action, once the market starts moving, it does not change direction, and it doesn't have time to do retracement, which is change of direction. It just moves in a straight line. Okay, like it moves in a straight line. Now, if you're a Lagrangian trader, it means before you trade, you are going to pass through a lot. But once you get that part, you are going to make massive profits in a very short possible amount of time, meaning that this profit is going to be so you will be in euphoria, because you make this money in the fastest way, and in a very short period of time, and with the least amount of stress and energy. You know, you measure how do you measure energy? How do you measure stress in the market? You know, when you place trade and you don't have rest of mind, you don't have peace of mind, and the market is fluctuating and you are feeling it, and you become disconnected in the social level, you are spending a lot of energy on that market. You really want to place a trade that does not give you heart attack, does not increase your blood pressure. But to get such trade, you need to pass through a lot of analysis. You need to deploy high-level philosophical ideas, right? So even with market cycle, you know that a straight line does not actually change the direction of the market. So when this market pull up, it definitely needs to come back because it was an impulse before. So for every impulse, there will be a pullback. So this is the pullback. And when this pullback happens, there will be another impulse. So market move in impulse, pullback, impulse. So you have to complete the cycle. And so with this idea, you have to wait. Maybe if you try this path could be that Lagrangian or least part of least action. When you try this path, what happens? The market fly until it reach here before it will think of changing direction. Okay, it does not want to follow this path because by nature the sellers will not agree by nature, because sellers are in control. Market doesn't just change direction automatically. The people, the dominant, the people that are in control of that market will never allow that to happen. They will continue controlling that market for some period of time. It's just like when you let's say, look at this. This thing is like, now there is a ball here. Okay, you're a footballer, and then you meet a ball at this spot. Okay, you meet a ball at this spot, and then you kick it to reach this spot here. When the football, okay, this is the trajectory. This is the trajectory of the football as it goes up. When the football reaches here, okay, when the football reaches somewhere here, okay, it will experience friction. It must hit, like it will hit an object, which is mostly the ground or another player. Let's assume it hits the ground. When it hits the ground, it doesn't change direction. It tends to continue in the current direction. That's what market do. It will tend to continue in that current direction. So don't expect that market will just change direction. So this idea of market cycle is needed for you to get part of this action. You need to understand market cycle, because let's keep checking this. Okay, when you get the part of this, when you understand market cycle, then understand liquidity. Okay, understand liquidity, understand trend. Okay, so we have a market that is actually going upwards like this, but you know that historically there is zero, like the rate of change of price here is zero. Basically, like this zone has zero rate of change of price, or what we call a zero differential, this level. So we are waiting for price to tap to this level so that you can be able to determine the part of this action. Now, what happened? Market tap here. Immediately it tap here, it went up, and then it dropped again. Okay, and create some sort of rejection. You will plan your entry here, even though you will be like, what if it need to come to the lower part of this zone? You know, you still need to deploy risk management. So that's all. Okay, and by the principle of left right rule, price have to respect the nearest structural level. So it have to react to this person first. I will drop the link of the left right rule in this video. So what happened? It fly. This is the part of this action, but it seems that this list action follow a kind of binary action, because you wanted to enter here immediately. It is not the least, because it doesn't follow the rule, because once they enter here to reach certain level and drop based on market cycle, and then this might make you to close that trade, and then you will be like, this is not what I teach in this video. Because if you are trading the least action, the market is flashing in profit in the shortest possible amount of time. Even like it will be like in 0 time is flashing in profit, right? And so this market, when you waited for pullback, the Lagrangian part activated, and then the market fly to the upside. As you know, in most cases, the idealistic form is that the Lagrangian part, or the part of this action, will have zero pullback or retracement, but practically it can have some sort of retracement, but the market will not go through negative. The profit will not change to negative. It will all be positive all time until you take your profit. Thank you. Make sure you are proactive. Make sure you subscribe to our VIP channels and enroll for courses and mentorship. Bye for now.